country's largest lender, State Bank of India, has reported a 0.9% year-on-year rise in profits, while its net interest income rose by 5.7% over the previous year. The asset quality ratios were stable, but the slippages rose in the quarter to about 7,900 crores, although the bank has already pulled back some portion of this. Gross advances saw a growth of 15.4% nearly year-on-year, while deposits grew by a little over 8%. For more on State Bank of India's first quarter performance and the way ahead, I have with me the chairman of the bank, Mr. Dinesh Kumar Khara. Mr. Khara, thank you very much for your time here on CNBC TV 18. Let's start with the deposit question, which has been occupying, everyone's mind of late. While you've stated that the CD ratio of the bank is comfortable, what kind of growth are you forecasting both on credit and deposit? Do you see credit growth getting impacted as deposit accretion remains lower quarter on quarter? Both the deposit growth and the CASA ratio, it has been impacted.
Well, Ritu, when it comes to deposit growth, it has to be seen at what cost, what interest rate are we raising the deposit. And, as a banker, we have to strike balance among various conflicting demands. And that is one of the reasons we have to be very mindful in terms of where our NIMs are. You will observe that our cost of deposit has gone up by about 45 basis points. But when it comes to NIM, it has only dropped by about 11 basis points. So that's very clear reflection that we have been very, very conscious in terms of the cost of deposits. And that is the reason why the absolute number of growth may not sound to be as big, but at the same time, we have got some excess SLR, which is to the tune of about 3.7 trillion even today. And that is something which is helping us in terms of supporting our loan book growth, which is at 15.5%. So as of now, we don't see any challenge, and we should be in a position to navigate these situations also well, without any impact on the our NIMs.
So speaking of NIMs for the quarter at 3.2% on the whole bank level, 3.35 on a domestic level, they have come down. Do you see further pressure on margins from here on, or will the bank be able to defend NIM at these levels?
I hope that we should be in a position, because whatever increase in deposit rates have also happened, even our MCLRs have also gone up of late, and we will be in a position to have the better yield on advances. Our yield on advances have already moved to about 8.86%, and we should be in a position to improve our yield on advances going forward. So that is something which will help us in ensuring that our NIM, we should be in a position to protect around these levels.
Okay, and so in terms of your credit growth outlook, earlier when we'd spoken, you'd spoken about a near 15% kind of growth for the year. What is the current loan pipeline looking like across segment, and what do you think you can end FY25 with?
We are having a pipeline is about 4.76 trillion. And it is equally split between proposals in pipeline and also proposals which have been sanctioned but awaiting disbursement. So I expect that, of course, when it comes to these corporate proposals, the disbursement takes some time. It does not happen immediately. But yes, of course, a significant portion of that, at least part of it, will be availed. This is what we expect. So I expect that we should be in a position to maintain our earlier guidance of about 14 to 16% kind of a growth, and more towards 15% kind of a growth is something which we expect to deliver in this year.
Okay, 14 to 16% credit growth level. Let's move on to the asset quality where, of course, the ratio has been stable, but fresh slippages have risen significantly to about 7,900 crores. SMA book has also gone up sequentially. How much of this do you attribute to seasonality? Where did these fresh slippages come from? And, what sort of improvement do you see going ahead from these levels? For the full year, for instance, what could the slippages and credit costs look like?
See, as far as slippages are concerned, about 7,900 crore worth of slippages which are seen in the first quarter. Out of this, more than 1,600 crore have already been pulled back. That is one. The second aspect is that invariably in the first quarter, it's very unusual trend, because we start the financial year all afresh, and we don't have the benefit of the previous recoveries which have taken place. So I think that is one of the reasons why first quarter always get to see some kind of a higher slippages. So I think I don't really envisage any challenge. And the other part is that we have seen some kind of a loan growth is quite handsome, and we need to provide for the aging provision also for the standard assets. So that is other reasons why we get to see the higher provisioning numbers. But as far as the asset quality is concerned, our SME book is now seeing a gross NPA number of around 3.5. Agri is also somewhere in the range of about 9. And when it comes to corporate, it is just about 2.2. These are all gross NPA numbers. So, and when it comes to retail also, we did see some kind of a uptick, and when it comes to the unsecured retail, but that was essentially on account of some delayed salary credit in some of the salary package accounts, and that is the reason why we had seen this kind of a slippage. But this all got taken care of in the month of July, and that is something that has helped us in pulling back some of these, I think majority of these accounts. So I think we don't envisage any major challenge as well, any challenge for that matter as far as the asset quality is concerned.
So if you could elaborate on that, stress you're seeing on unsecured retail, because we've been hearing the same commentary from a lot of banks. Are there pockets of stress you're seeing build up which are not just seasonal, whether that is MSME, whether that is the unsecured book? Of course, agriculture could be excluded because of seasonality. Are you seeing any specific pockets of stress you'd like to call out?
No, I would say that, as I mentioned, that these are all temporary aberrations. That is something which has caused these slippages, and I don't expect that it will have any prominent impact on the book. And all the subcomponents of the book are faring well, and we have actually seen that SMA 1 and 2, as compared to previous year, have also come down from over 9,300 in the first quarter in the previous year. It is now somewhere around 7,900 odd crore. So that is something which we have seen. So I think it's a very clear reflection that when SMA 1 and SMA 2 are much lower, that asset quality is not a challenge. And also, if at all you will look at the slippage ratio, it is actually 10 basis points down as compared to the first quarter of the previous year. So I really don't worry much about it.
So, but would you like to guide the street on what the credit cost for the full year could look like?
See, we have been saying in the past also that we'll keep it below 0.50, and even now also at 0.48. Our effort would be to bring it down as much as possible.
Okay, so quickly, the consultation paper from RBI on NCR, the liquidity coverage ratio, which is suggesting that, banks assign this extra 5% runoff rate for retail deposits through internet and mobile banking. I heard your comments earlier saying that, you'll submit your view to the RBI, but what is your initial assessment on the impact something like this could have on your LCR, on your margins and so on?
I think, Ritu, as of now, let us wait for the RBI guidance on this, and then we will really work it out. But our preliminary assessment does not really warrant any triggers of being overly concerned.
Okay, not overtly concerned on LCR, although you're not giving us much in terms of that. But, Mr. Khara, before we end, because, your term as the chairman of State Bank of India coming to an end in a few weeks from now, and what has been, a tough period for the economy as well with COVID and whatnot. If I were to ask you how you assess your performance, what you thought were some of the biggest achievements you've had, or some disappointments, or the areas of unfinished business as you end your tenure as the chairman?
Well, what gives me satisfaction is that we are having a consistently high ROE. We are maintaining, as against the guidance of 15%. We are now more than 20% ROE. We are maintaining quarter after quarter. We are maintaining very excellent ROA, which is more than 1.1. And also, one thing which I can perhaps share with you, in last 4 years, we have generated the net profit of about 1.6 trillion. And whereas in last 6 years plus, we had generated the net profit about 1.4 trillion. So that gives a lot of satisfaction. And on the top of it, we have plowed back about 1.14 trillion in last 4 years into the capital, which has actually helped us in growing our loan book without really looking at any capital raise and maintaining decent capital adequacy ratios also. So I think these are some of the points which gives me satisfaction. And of course, my ambition was to see this bank generating a profit after tax of 1 trillion, which I hope we'll get to see by the end of the financial year 24-25.
Well, I hope we get to see that 1 trillion profit soon. Mr. Khara, thank you very much for speaking to CNBC TV 18. It's been a pleasure, and we wish you all of the very best for whatever comes next. Thank you.
Thank you very much. Thanks a lot, Ritu.